Hello, everyone. It is almost Christmas. It's Friday, December the 24th. It's probably Christmas for some of you, if you're in Asia, perhaps even in Europe, early morning in Europe. It's still late afternoon in San Francisco on the West Coast. Keith, we're always last, aren't we? Why? I thought we were the leader in everything on the West Coast.
Yeah, exactly. Well, it's all about time.
It's all about time. We lag
Time.
behind. Very funny. We lag behind when it comes to the clock, but we always seem to be ahead when it comes to everything else. We're supposed to be inventing Web3, and now a couple of our better known residents, Marc Andreessen and Jack Dorsey, are at odds on what exactly Web3 should and shouldn't mean. We've been talking, you and I, Keith, a lot about Web3 over all of 2021. It's coming to a head, a climax recently. And I thought that Dorsey's point was one that at least I agree with. I don't know what you think, and why Andreessen was so upset seems absurd.
Well, I think there's the big picture, and then there's the kind of the reasons why someone might be upset. But the big picture, I agree with you. I think Dorsey is the genuine article when it comes to Web3. He really believes that the future of the world is a world in which you will not need corporations or stocks and shares in companies in order to get value from what happens on the internet. And he is looking aghast, I would say, at the first investments in quotes Web3 seem to be creating centralized companies sitting on top of blockchain.
Right.
And
But actually, we've done a disservice to our massive viewership because I should have got you, Keith, to actually explain what's happening. Not probably everyone knows this latest mini war between Jack Dorsey and Marc Andreessen over what Web3 means or shouldn't mean. So maybe you can explain it to everyone.
So it all started with a guy called Chris Dixon, who runs the crypto fund at Andreessen Horowitz, tweeting things which were interpreted as appropriating Web3. And it is certainly the case that Andreessen is leading, at least in venture capital, is a leading investor in what is called Web3. And Dixon kind of laid claims which irked Jack, because in Jack's world, venture capitalists can't own Web3. It would be the antithesis of Web3 were it to be the case that they could. And so Jack kind of tweeted back that implying that if Andreessen are owning it, he's not part of it. In other words, saying that there's going to be a Web4, because if what they're doing is Web3, I'm not part of it. So
yeah, is that really? Maybe I got the wrong end of the stick. I thought that what Dorsey is saying, or was saying, is that Web3 actually isn't going to change anything when it comes to the architectures of power. That the whole Andreessen Horowitz line that Web3 changes everything, decentralization. Jack Dorsey is saying actually that's not the case. The old powers that be are going to be the old powers that be in Web 2.0 are going to be the new powers that be in Web 3. Or was he not saying that?
Actually, we're both right. He's saying that the Andreessen Horowitz version of Web 3 is what you say. And until Andreessen, not himself personally, but Chris Dixon implied some kind of ownership over Web 3, Dorsey probably wouldn't have said anything against Web3, because Web3 was not defined in that narrow sense.
So what did Dixon? What do you mean ownership? You said Andreessen Horowitz owns the term or the movement?
No. He was just blowing their trumpet. He wasn't really claiming ownership, but he went close enough to wanting to associate Andreessen with Web3 that it caused a reaction from Dorsey. And Dorsey's reaction restated what we all believe Web3 is likely to end up being, and it isn't what Chris Dixon is investing in today. And therein lies the thing. Now, Chris Dixon is doing some great things, by the way. I personally am a big fan of Chris Dixon, and I'm a big fan of Andreessen when it comes to the investments they're making in Web3. So the only thing that really happened here was an emotional reaction to staking a claim, really, and that led to this battle, which just reinforced the debate about the difference between Web 2 and Web 3, as you just did.
But isn't there a contradiction even in the idea, and I think maybe Dorsey's touching on this, if Web3 is so decentralized and democratic and all the rest of it, how are VCs even investing in it? How can you invest in a DAO?
Well, there's a lot of very thoughtful writing, some of which has been in That Was the Week, that answers that question. And it's all to do with not owning shares, but buying tokens before there's really a service. You buy the tokens, very cheaply. And if the network effect kicks in and the tokens become valuable, you're sitting on all these tokens, which you can then sell if you want to.
So it's like Bitcoin. It's like buying Bitcoin before it took off.
Yeah. So whereas shares are the securitization of future value, tokens are the tokenization of future value. So it's a different instrument. It doesn't apply ownership in a company, but it implies having bought a chunk of future value from a service that may end up being valuable.
So you're investing in a network, essentially.
You're investing in a network.
So
Now,
what's the difference, really?
Well, today it's hybrid because a lot of the early Web3 work is being done by corporations that have stocks. So an Andreessen will buy shares and tokens in a hybrid. And Jack is a purist. Jack's saying, well, look, this isn't Web3. And if it is, then there's going to be a Web4 because this hybrid stock and token world will not continue. Bitcoin is closer to what Jack thinks the world will end up looking like, where there is no owner. It kind of just runs. People can buy or sell Bitcoin or sell services or products for Bitcoin. And there's no kind of central authority or central ownership other than the algorithm that mines Bitcoin on a declining speed basis every year. And he, for him, that is closer to what Web3 will look like than anything. And what Andreessen is investing is not close to what Web3 will look like. The point I make in the editorial, maybe we can discuss this, is I actually think that what Andreessen Horowitz are investing in are preconditions for Web3. In other words, nothing is born fully formed. And so somebody has to go and build blockchains, build DAOs, build smart contract software. All of that stuff has to exist. And until it exists, you can't.
So they're really investing in the plumbing of Web3.
I think so. Yeah.
But there is plumbing that enables the plumbing of Web3. That's the internet.
Well, that's a layer deeper.
Right.
It's almost like if you think about JavaScript or SQL, the language SQL, those are layers on the internet that allow interactive web pages with data. Right. And so in the same way, the blockchain is going to need logic and functionality and data management stuff to happen. And the question is, how is that built? Is it built by centralized corporations? So you end up with, the future version equivalent of Salesforce.com owning blockchains? No. Jack would say no. Probably Andreessen would say no as well. But it doesn't stop Andreessen investing in, let's say, Filecoin, which and other building blocks.
I think what's clear from this recent spat is whatever one thinks of Web3, it's not going to change the way we behave. It's not going to make us grow up because, in particular, Andreessen, who's so progressive and innovative when it comes to investment, is behaving so childishly. I mean, why would you ever want to block Jack Dorsey? It's such a ridiculously childish thing to do. It's
Well, it's even
inexcusable and pathetic, in my view. I mean, why do that? The guy must be about 60 years old. What's his problem?
he's not 60. He's younger than me, and so Andreessen and
You're 70.
not yet, but
I'm
soon.
teasing you.
Few years to
I'm
go. Yeah,
60. He's older. Is he younger than me? I hope not.
he's probably
He's
is
got
younger
less
than you.
hair than me.
I mean, just you need to understand Marc Andreessen to understand it. I have known him since 1996. When I first came to the Valley, I did a product called Internet Keywords, which Microsoft partnered with, and Marc copied it and created a product also called Internet Keywords built into Netscape. And he and I almost did a deal. And later on, I met with him to talk about investing in Jean-Marie Hulot's company, Photopedia, and we've interacted on email. He is a driven innovator, just like Jack is, and he doesn't tweet, by the way, anymore. So blocking Dorsey, which is basically saying Dorsey can't see his tweets, is kind of irrelevant because he doesn't tweet anyway.
Yeah, but why would you ever do that?
So his blocking Dorsey was a signal that he's pissed off.
But
And that's
pathetic.
all it was.
I mean, but it's like so absurd that, if this Web3 thing is supposed to generate openness and all this new stuff, and here you have a guy who can't even, he's not capable of hearing any kind of criticism, even from someone as credible and as important as Jack Dorsey, then I fear for the future if Andreessen has power, because this is always about power ultimately.
Yeah.
And the fact that they're disagreeing about power and then Andreessen behaves in such an irresponsible way is very depressing.
To some extent, Andrew, it's irrelevant. It's a bit.
I know, but it's all irrelevant. We're talking about a spat, but it's still symbolic and interesting.
It's as if Steve Case and Bill Gates in 1994 had a big argument about the internet when Steve Case was at AOL and Bill Gates was at Microsoft.
Well, Gates might have behaved like that, but Case certainly wouldn't have.
No, they're both. I actually don't think either of them would. But the point I'm making is their impact on what happened on the internet was minimal.
Yeah, but my point's also a serious one in the sense that for all this structural and architectural technological change, we're behaving just as childishly as we've ever done. And that's why I'm fearful of Web3 and Web4 and Web5.
Well, I think the Web3 people would be with you, and they wouldn't recognize either Jack or Marc Andreessen as necessarily representative of what they're building, because the real Web3 people, the ones who've been behind NFTs or Solana or the Luna and the stablecoin associated with Luna and all the DeFi people, mostly would have nothing to do either with Square or with Andreessen Horowitz.
So okay, so I take that point. And what about Dorsey, who seems to have behaved fairly? I mean, what's his interest here? Is he suggesting that Square is a real Web3 company, whereas Andreessen Horowitz aren't really Web3 investors in their heart?
Square is clearly not a Web3 company. It's centralized. Neither is Andreessen a Web3 venture fund. So what's really happening here is Jack is embarking on a new phase of his life. He's renamed Square to The Block. Twitter has put in place a team to build a version of Twitter that's fully distributed. But it's early days.
What does that mean, fully distributed for Twitter?
No central ownership or control over what people publish and things like that. Think of it as social media without a company at the center of it. So Jack has a vision for what comes next, and it has nothing to do with what he's done so far. He's really thinking about the future, and nothing he's doing today looks anything like that future. So same with Andreessen Horowitz. They have a vision for the future. They published a great thing last week about, the title was, "You're not going to work for a company in future. You're going to be paid through a DAO." And so they actually agree pretty much vision-wise on what the future looks like, and neither one of them is yet the future. They're both the past. And the people who are building the future are younger, engineers mainly.
Well, Marc Andreessen 40 years ago.
Yeah. So I think it is a bit of a sideshow, but it's important because it shows that there's very big stakes in
And it
Web3.
also shows Web3 is real. I mean, it's increasingly becoming a term that people understand and can agree on and argue over and be offended by, which I think is interesting.
Yeah, I agree with that. And Elon Musk was the funniest to me. Elon Musk afterwards tweeted, "Has anyone seen Web3? I've been looking for it and I can't find it. I can't find it." Or
I'm not
words to
sure
that
that's
effect.
particularly funny. What I mean, is he just pissed because he's not involved in the spat?
Well, he's Mr. Dogecoin, and
Yeah, but
I
he's not really. I mean, his companies and his plays on Web3, SpaceX,
no,
Tesla.
no, no. I think what he was doing is, did you ever read the Private Eye magazine in England?
Yeah.
He's basically Private Eye. He's just poking fun. He's being an anarchist and having fun at everyone else's expense by tweeting that. I don't think there's any meaningful.
But did you see that other headline that Musk claimed that he lived in a $50,000 house, and then it's revealed that he's shopping for the most, or he's living in the most expensive place in Austin, Texas, and shopping for particularly expensive. So I think what hasn't changed, whatever one says about Web 1, 2, or 3, is the hypocrisy of these people is still as evident, if anything, more self-evident than ever, because we're much more critical and much less willing to give these people the benefit of the doubt.
Yeah, well, I
I
think
am anyway. Maybe
I think in any assessment of Dorsey, Andreessen, and Musk, 99% of what you say has to be positive, because they're awesome. And okay, now now they're having a silly fight about something that they're not involved in, really.
Well, I certainly wouldn't agree with that in 99.9. I mean, it depends what criteria you use. They're incredibly smart people, incredibly successful. There's no doubt about that. But on lots of other levels, but that's another conversation.
Yeah.
And so just to return, because this is your area that you really understand. What is Web3 going to do to Andreessen Horowitz? Are they basically fighting a rearguard action ultimately? When the fat lady sings with Web3 in 20 years, are they still going to be around?
Well, look, a lot's going to change. It's interesting. I did an interesting week. I had to meet with my lawyers about my startup, SignalRank, which is a company that is going to be investing money into seed fund managers in the venture space. And the discussion was, are you a company or are you a fund? And, in the US, there's two acts. One is the 1940, I think it's called the Investment Act. And another one is from the same year, relates to defining funds. And it turns out that in the US, no one has ever created a company that acts like a fund, according to our lawyers. Certainly not a publicly listed company. It's a novel combination. And to such an extent, it's almost impossible to make happen easily. And it got my mind thinking about, reasons why you would not want to be either a company or a fund, but you would want to still do what you want to do. And Web3 would have lots of solutions in this space, but the government would try and regulate it using old-fashioned legislation. So you'd end up in front of the SEC, maybe even go to prison, because you're doing something different.
If you go to prison, Keith, can we still do this show? Can you? I assume you can broadcast from jail.
I have no experience of being in jail and what the constraints are, but I'd be shocked if you can broadcast from jail.
We'll have to ask the Maxwell girl. Is she going to go to jail, or the other one? What's her name?
Lane.
No, the other one who's going to jail. The Silicon Valley woman. What's her name?
Oh yes, Holmes.
Holmes. Do you think they'll share a cell, Holmes and Maxwell?
I would certainly doubt it.
I hope they don't get up to any hanky panky. Probably will with Maxwell involved.
Where are you going with this, Andrew?
Where I'm going, Keith, is that whatever happens with your company, one thing I think I can guarantee, and I can say it publicly, you will not invest in Clubhouse. Is that fair?
That is definitely fair because A, it's too expensive, and B, it's not looking too good, is it, Andrew?
I mean, we talked about the genius of Marc Andreessen. Was that a good investment, or are they just putting so much money in that whatever they invest in becomes golden, even if it's a piece of crap?
Well, I do think money can turn ideas into larger companies. I think money is a kind of a barrier to entry for someone else. So there's some truth in that. And Clubhouse has a lot of money.
But is
And
Clubhouse a sort of an experiment in that area where so much money poured in? And I was always extremely skeptical. And now it's come back to earth, and it's not clear what they are or what they will be and how they can compete and how they can justify such absurd valuations.
Well, so I have to log into this to make it work. But basically, Clubhouse still has most of that money.
Yeah.
And if you and it's a lot of money. And if you go down and look at its growth, which this New York Times article does, it has something like 600,000 clubhouses per day.
Wow. So it's still going. People are using it.
People are using it, and
Do
they
you know
haven't.
anyone who's using it?
I do actually. Yeah.
It's not all just marketing people trying to sell their marketing ideas and services.
Josh Constine, who is at Signal Fire Capital, uses it to great effect, very
The
well.
ex TechCrunch guy, right?
Yeah. Now, Kara Swisher uses Twitter Spaces, and that, in a way, is what
Yeah.
the articles are about. It's about the fact that there was very, very quickly Clubhouse got competition, and Twitter Spaces. Kara Swisher, by the way, is doing a fantastic job with Twitter Spaces, and she's really growing her audience and influence.
So what's she doing with Twitter Spaces? She's just basically putting on live events.
Live events every Monday, usually.
But
And
not
then
New York Times stuff. This is her other thing.
I don't know how it's branded, to be honest, but it's very much it's very much about her. So I don't know if it's part of what
Yeah.
for the New York Times or something separate. And she has a co-host who
Scott Galloway.
Yeah, not Galloway. That's her podcast. She has a co-host, Casey Newton.
Oh, so that must be, maybe that's connected with the Verge. Is she still involved in the Verge? Not the Verge, the thing she did. Anyway.
Yeah, is it Vox or the Verge? It's one of those two. And anyway, yeah, Clubhouse has got a lot of competition. The buzz seems to have gone, but I suspect the value in the user base is still substantive, and probably those investments will not turn out to be bad investments.
Well, what's going to happen with it, though? It'll just limp along. I mean, as you know, Keith, better than anyone, you can't limp in Silicon Valley. If you limp, you get picked off. You're dead.
Yeah. It's interesting. Dave Marin had an app at the same time I had Just Me called Path that was very buzzy at the time and then faded into nothing. Clubhouse could go that way. It's possible. But unlike Path, they have a very large user base that's still engaged with it. Like I haven't got my phone with me, but if we looked at Clubhouse right now, I guarantee there's a lot going on there. It's just less buzzy. And so when you have hundreds of thousands of daily users, and you've got high quality talent using it, there's going to be a way for it to monetize and be interesting. And audio's changing. That whole space of podcasts where people did something like we're doing, but privately recorded it, and then did some editing, to put music on at the beginning and the end and add some ads and stuff. That whole podcasting universe, there's now the beginnings of the live version of that. There's an app called Call-In that David Sachs has put together. There's Clubhouse, there's Twitter Spaces, who are now you're allowed to record and play back later a Twitter Space. And Clubhouse has something called Replay. So I think that whole audio space, which is what podcasts are going to become a subset of it, which is going to include live and interactive audiences, that's not going away.
And that's sort of independent of Web3. I mean, Clubhouse is
Yeah.
It could even be a Web 1 company, certainly a Web 2 company. There's nothing about it that's Web 3.
No, there's some interesting tech that you can now do because of the cloud that you couldn't do before, and but that's about it. Other than that, it's very similar to Mark Cuban's Broadcast.com, which was Web 1 and sold to Yahoo.
Those were the days. I remember that one. I remember Broadcast.com before it was Broadcast.com. Your wife has been busy, probably busier than you, Keith, writing about venture capital, and you have an interesting piece by her in the newsletter this week. Genet, the great Genet Tier, who is the leading tier. You're the
Of
second
course.
tier, Keith. Has anyone ever made that joke before?
I think I'm usually determined to be third tier.
Third tier, yeah. You're actually the fourth tier.
So yeah, this is
Actually. You're the fifth after Genet and your three boys.
There you go. Not to mention my mum. Anyways, yeah, we've talked a bit about Tiger Global and SoftBank and Insight Partners. It'd be nice to think we influenced her in writing this, but she didn't tell me she was writing it, so I doubt it. Anyway, she's written a great piece,
You never influence her. She always influences you.
Yeah, of course, as it should be. Anyway, it's a very good piece in Crunchbase News, and it goes through who are the most active investors. Y Combinator, no surprise, is big there. But she focuses in on these people: SoftBank, Vision Fund, Insight, and Tiger Global, who, if you compare the light color, which is 2018, to the dark color, which is 2021, and you look at the growth of their investment numbers year by year, this has been just a breakout year for these people. It's just so much bigger than any prior year.
I mean, we will, I hope, do a show next week, which is December the 31st. But in terms of reviewing 2021, what kind of year has it been for venture?
Well, big, fast, and getting faster and bigger.
Is it the biggest story you think of all in tech, the venture story? I mean, you have maybe a biased view because you've got into it yourself, but it seems like a really important story in tech.
I think it is, but I do think ventures growth is a symptom, not a cause. I think the underlying cause is how cheap money is.
Right.
So asset allocators are very attracted to venture because of the returns it can drive. And I think the second cause of the growth of venture is how many people on the planet are plugged into the cloud via devices they own, means the market is just huge.
I did yesterday on my Keen On show. I had my old friend Larry Downs, who's just edited a new volume from Harvard Business Review, a kind of analysis of 2021 in tech. And he argues, and maybe we can talk about this in more detail, even the book, and maybe even with Larry next week. But he argues that this is the year that science, that the business, that business and society have caught up with science fiction. That whatever we used to think of as science fiction now is real. Do you think there's some truth to that?
There is. I mean, one of the things when you invest is you live in this world of research and development and product, and everyone knows R&D. But if you're an investor, R&D have to turn into P, because until they turn into P, nobody can make money from them. And science usually comes first. And the gap between science and products is usually very wide. It's shrinking, as we saw with the vaccine development. That the time between science and product is shrinking, and the value of product is growing at a very fast rate. It's the buzzword that used to be used is what's it called? The singularity, when change is so fast that human beings can't keep up with it anymore. Well, that's starting to feel right. It's starting to feel right. Not most of the sci-fi, like we're not going to do time travel or cryogenics anytime soon, but certainly understanding the human body at the DNA and the cellular level, being able to deliver software to 7 billion people in 24 hours is now possible. assuming they all had smartphones, which about 4 billion of them
So
do.
is it conceivable that 2021, and this comes to our startup of the week, is it conceivable that 2021 will be the year when historians of tech and investment look back when Africa finally became real? We always used to I always used to think of Africa in terms of investment like the Brazilian economy, always the next big thing on the horizon, always next, never in fact. But is 2021, is Africa actually happening?
It's happening is a relative term. It's certainly way smaller than every other continent
Right,
measured
but
by
this graph you show is pretty impressive.
yeah,
From
the
a
$4
little
billion
over a
invest.
billion to 4 billion.
Yeah, no, it's fantastic, and it's driven by, as everything is in capitalism, greed with a small g. Africa is becoming important because Africa is actually important. There's going to be 2 billion people there in about 20 years from now. And a lot of them are middle class and able to spend money. The natural resources we already know about, but this is about human beings able to spend money and being invested in, and in technology. So it's fantastic to see, and it's new. We've done Africa a startup of the week at least twice before, and this is a really nice.
Well, you have a particular affection given that Genet is from there and you spend a lot of time there.
Yeah, I love Africa. It's fantastic. It's just an amazing place. And
Is this conceivably also the stage, the platform for the next Cold War between US style capitalism and Chinese style capitalism, given China's interest and investment in the area, in the continent?
I think that's already happening, but the US can't compete because it's not prepared to invest as
But of
much.
the money of this 4 billion, is it all American? Where's the capital coming from?
I don't know the answer to that, but it's basically asset allocators. If you go below the surface, like in South Africa, you've got people like Old Mutual, which is a fund, and there's lots like that, which are insurance and asset funds. A lot of the old diamond money is now in funds, for example.
Very bloody, nasty, dirty money. And are there particular centers? I think we talked before. You found that Egypt, Nigeria, of course, South Africa, Kenya. Are there particular centers for this which are really taking off?
All of them, all of the above, but less so South Africa because it was already further along. It's the other three that are driving it. Egypt is huge in this.
And is this a kind of, in Egypt, is it a form of state capitalism where, because it's such a strong state and such a politically repressive place, is there freedom to invest in Egypt and freedom for entrepreneurs?
There is. I mean, if you think about the world, where do you see a country that isn't state capitalism? Even the US is.
Well, the US is not. Yeah, Jack Dorsey and Clubhouse didn't need to work with the government, or Jack Dorsey at Twitter or Square doesn't work with the people in DC. I mean, there's always some DC influence, but Egypt has such a strong autarkic tradition and such a bureaucratic, repressive government and such layers of bureaucracy that I think just to do a startup and say, okay, like what you're doing, or what Dorsey or Andreessen have done, must be very hard.
Well, Egypt's a bit like Turkey, if you wanted to compare it to another country.
It's a even more centralized and bureaucratic and politically repressive version of Turkey.
Yeah, but from a pure, size of population and amount of value being created, they're both big.
And then, and I know this is a bit of a dumb thing to say, but most of what I say is pretty dumb. I mean, should we even be talking about Africa, given that Egypt is North Africa, Muslim, and has nothing in common with South Africa or Kenya or Nigeria? Is this even a meaningful term?
Socially, probably not, but economically, it's meaningful because there's a real economy there. South Africa, in a way, is the imperial power to the whole continent, both militarily and economically. But that's changing as China engages, and so I think it's the only thing is Africa is not going to be this place where everyone's starving and there's no value. That's changed. That's already changed, and it's now going to accelerate.
Well, it's fascinating new chapter. It'll be very different from India or China, but also in a sense in parallel. Maybe the next chapter in global development after India and China. Well, finally, Keith, I know you got your Christmas Eve dinner. You do German Christmas, so you have your presents tonight. I'm sure you're itching to leave. It's always Christmas on a Friday with me when it comes to tweet of the week. What's your tweet this week?
So it looks as if it's Cardi B saying, "Do you think crypto is going to replace the dollar?"
Who's Cardi B?
It's just a person, and it wouldn't have
It's
made
probably
too.
Marc Andreessen in drag.
He could
Or
be, because
probably, or even more likely, your pinup, Paul Graham.
could be. The reason it made it is Jack responded. The tweet came out December the 20th at 4:27, and at 4:34, a full 7 minutes later, Jack, who obviously pays attention to these things, replied to that tweet, "Yes, Bitcoin will replace the dollar." And given the spat is, I think, largely driven by Jack's quite correct belief that Bitcoin represents the pure version of what Web3 might look like, I thought it was worth showing his tweet, which we
Doesn't he
can.
have, given his block company, he has some self-interest there, pushing up
Well,
the price of Bitcoin. At what percentage did Bitcoin go up after that tweet?
not very much, because it isn't up or down. It's generally been down the last few weeks, but he is. He makes money whether Bitcoin goes up or down, because it's transactional. He's making money on the transaction. So I
So
think
as long as people are buying or selling, he's happy.
yes, exactly. So
And if
that,
that is the case, I mean, we don't have time to talk about this now because you've got to run off to your Christmas Eve dinner. But if that is the case, then Web3, or whatever we want to call it, is going to change the world more than all these other things put together. It's going to change the world more than anything certainly since the Second World War, if not since the First World War.
I think that's, well, I'd say since the pound was replaced, first of all, by by the gold standard and Bretton Woods, and then the US took over the currency level as a reserve currency of the world. We're living through a period in which a lot of these certainties that the last 20, 30, 40 years have had are being changed. And tech is a potential solution to some of the downsides of that change. And so I
Ever
think
the
that,
optimist, Keith.
and I will say this, Andrew, Jeanne Thier is, in fact, from the Pretorius family that hails from
Gold miners.
Bloemfontein, and her grandfather was the mayor of Bloemfontein, and her grandma Lottie Pretorius hailed from Dresden, I think it was, or one of the East German cities. I think it was Dresden. Might be Leipzig. It's one of those two. And so her dad is Scottish background, but they always did the German style Christmas. So in honor of that, I forego my Britishness on Christmas Eve, and we do a German Christmas.
Well, happy Christmas, Keith. It's not the end of the year because we're going to do a New Year's Eve one when we can really look back at 2021, but it's been an excellent year, an excellent show. I wish you happy holidays, happy Christmas to you and your family, and
And the
we will
same
talk
to
again
you.
next week.
And a happy Christmas to everyone who's ever watched one of these things.
Yeah, we're building an audience. It's great to have a real audience, and I'm looking forward to next week where we can really look back, perhaps fully over the year, what's happened, what hasn't happened, and of course, what will happen in 2022.